The deal room. The deal room. By Brokers Connection.
The average age of a first-time home buyer is a record high, 40 years old. That is why President Trump says he is proposing what his administration is calling, quote, a complete game changer, a 50-year fixed rate mortgage.
Welcome to this evening's pod. This is episode 1 of The Deal Room, sponsored by, powered by, fueled by Brokers Connection, Fund Rock Capital, as well as Lending Capital. I am your host, Darryl Mills. To my right, I have my infamous co-host, is Jose Martinez, joining us this evening. We have, to the left, we got Joey G. Joe Garan is here. And to Jose's right, at the very end of the panel, Sexy Chocolate himself, this is Mr. Fun Rock, Mr. Stanley Julian. Everybody, thank you so much for tuning in. Welcome, welcome. So again, now we rebranded. The name is The Deal Room. And this is really going to be the show where we translate market chaos into opportunity. Every episode, we're really gonna break down, what's happening in real time in, world markets, in our current economy, the way that interest rates, business lending, real estate capital flows, the way that the whole game is going to be elevating or sometimes declining. But we're gonna let you guys know what's going on in the moment. We're gonna show you guys how to play the modern funding game with clarity and confidence,
and also understanding, the reasoning behind certain changes, right? And I think that's really the topic of today. And Stanley, I'm glad that you're joining us, is because one thing that we've been speaking about a lot lately is as we enter 2026 is what's going to change, what are the trends. And one of the things that stood out in the topic was, a 50-year mortgage, right? Which is crazy. It's unheard of. And I guess let's start off with that. A 50-year mortgage. We have obviously Stanley. Stanley, what's your point on that? What's your take on a 50-year mortgage?
Because, and Stanley, before you answer, traditionally, the mortgages were structured 15 and 30 years, but that was because your mortgage wasn't really supposed to outlive your career, right? Like your mortgage was supposed to be around as soon as you're done paying off your house. That should be when you're on like the back end of your life where, you don't really have to work the 9 to 5 every day. The hustle and bustle is done. And you're supposed to really just be sitting back collecting a check with no mortgage payments. That's how it was supposed to be. Do you think the 50-year is like a good idea?
It all comes down to the client at the end of the day, right? But if you just look at the deal, it doesn't really make sense. It doesn't pencil out. Because one of the reasons it's being marketed as an option is to allow young people to enter the housing market, get a piece of the American dream. But the piece of the American dream is building equity, having something you could pass down to your family. Now, if you look at these numbers, if you're acquiring a mortgage, let's say in your 20s, and you have a 50-year mortgage, that means you're expected to work until you're 70. That's crazy to me. So a 20-year-old that makes a good living, that amortization of that mortgage is you're going to pay 3, 4, 5 times what it's worth. And the danger of that is depreciation. So there's a chance that you could be what they call upside down that house or not even have that much equity when you're done. So if anything, you're technically renting because you're going to live in it and then hand it off because who's going to want a house with no equity? That's the dangers of it. Some people love it because of possibly a lower monthly payment. So debt to income, one of the most crippling things in America right now, student loans. That's holding a lot of people back from home ownership. But then when you look at their debt to income, meaning how much they make compared to how much their monthly obligation is. Now, a lot of people can't get into a $2,500 a month mortgage. But you stretch that to a 50-year mortgage, now you can get into a $1,500 a month payment, $1,200 a month payment. So it makes more sense. But just because it pencils out good for you, just because it makes sense, just because you qualify for it, doesn't mean you should have it. Doesn't mean it's good for you.
So, let's play devil's advocate because, now, this podcast, we just want to debate each other.
Yeah.
Right?
I don't think you'd save that much on a 50-year mortgage, really.
Not that much at all.
It'd be like a couple $100. The rate's probably going to be higher because it's a longer term. Like realistically,
I'm glad. I'm glad both of you gentlemen, both of you gentlemen bring that up because I figured I wanted to be prepared, especially for our first podcast as far as a 50-year mortgage. And what I did was I went ahead and just traditionally, just for numbers, I went ahead and put $100,000. Let's say it's $100,000 loan, and let's assume just to on the safe side, right? Let's say 7% APR. Now, Stanley, am I right or am I wrong in saying that the longer the mortgage, the year, the term, more than likely the interest rate would also increase because it's not going to stay the same.
Correct.
So that's definitely one thing you have to factor in as well because now risk is playing a big factor. But let's assume that it's the same. At 7% interest rate, $100,000, a 30-year mortgage, just your principal and your interest alone, not including taxes, not including insurance. That right there is a mortgage payment of $665. Okay. Now, let's take that now into a 50-year mortgage. These gentlemen are right. 50-year mortgage is going to bring it down to $601.69.
you're saving $64.
You're correct. You're saving $64. Now, everyone is going to say, oh, wait, but it's a 50-year mortgage. It's going to be better. See, that's the thing that happens. And it also happens on our side, right? On the business lending side is everyone looks at that payment, right? And everyone says, I want the lowest, the best deal. Well, ideally, this isn't the best deal if you extend the term. When you go ahead and once again, look at an amortization calculator before you start spitting out an APR, right? If $100,000, just principal and interest, what happens, the total amount of interest that you've paid after 30 years on $100,000, 30-year mortgage, 7% rate, that is $139,000. That means that you could have purchased another house and 39
and put down payment on another one.
Purchase another house up front, no mortgage, and then put that 39,000 as a down payment for another.
Correct.
Now let's look at a 50-year mortgage, right? A 50-year mortgage, you're looking at $261,000, right? So you're going to go ahead and save $60, let's say, to then pay an additional $261,000 on there. And just as Stanley mentioned before, think about it. You are never going to really generate equity on that property if it's over 50 years because it's taking you so long. Remember, whenever you're doing a mortgage or any type of payment, the interest is front loaded in the beginning, right? When you look at the payment, the interest is the bigger chunk of the principal. Once you start hitting that 50% mark is when it evens out. After the 50% mark, which is, let's say, if it's a 30-year mortgage after 15 years, the majority of the payment goes towards the principal. Now think about it. Now you have to wait for a 50-year mortgage, once you hit 25 years, right now it starts to even out.
Correct. And now the mortgage company got their money.
Yeah.
You didn't even start paying the mortgage itself or paying down the loan.
Right.
You gave them majority of their money. And right now, if you did it at 25, you'd be 50 years old, just starting to take a chunk out your principal.
And the reason why this whole thing started was because, right, and we were when we were prepping, we were discussing it, is because a lot of people that come out of college, unfortunately, and we live on Long Island, right? An average home on Long Island in Nassau, from what I recall last was in Nassau, it was about $800,000. That's an average. I'm talking about fix and flipping. I'm not talking about anything else. On average, those were the numbers. In Suffolk, it's a little bit less. I think it was $750,000. Now, think about what that mortgage payment looks like, or just the qualification aspect of it. You can't come out of college. When you're coming out of college, hopefully you're making $100,000, right? But how many people are actually making $100,000 straight out of college? And the American dream is to purchase a property. And I think that's why they try to extend it to 50 years. Yeah, if you think about it, maybe it would help out. But once you look and you put the numbers down, you're paying $200,000 for it's 150% that you're paying for, and you're only saving a fraction, or your savings are very, very minimal.
And now I have to add something to that. Now, forget politics. My personal belief is it's the time bomb ready to explode. The reason I think it's a time bomb ready to explode, because think about it for a second. Let's forget the numbers. I give you a 50-year mortgage. Jose, was it $24 in savings? Not even much.
$60.
$64.
Let me drop your payment by $200. Let me explain to you why that means nothing. Now you have hundreds of thousands of people that weren't in the real estate market now bidding on homes. Guess what happens to the price of those homes? They start going up.
Correct.
Because that theory of a 50-year mortgage allows people in the market assumes that the market price stays the same. That's not reality. And the last time we experienced that was during COVID, when everyone started buying real estate like it was running out of style. The same house you could have bought for $100,000 within 12 months was $120, $150. We had one of the most aggressive appreciations in history during COVID. So now think about that. A law passes telling you all these people that were on the sideline are going to rush into the market. And if you've been in real estate during COVID, you remember the lines around the corner for every house, open house. That happens again. So now that same house that you're like, oh, I can afford it. If it's $100,000, by the time you go to open house, there's already a bid for $120, $125. So what happened? You just created competition for yourself and you still don't get the house.
Yeah. No, and it's definitely something that you have to think about as you start. A lot of our viewers are actually watching. Well, if you're going to buy a home, right, take that into consideration.
Right.
Because sometimes if you can afford it, a 15-year mortgage is much better. That's why do you think those exist, right? A 15-year mortgage. Then there are 40-year mortgage options.
But no, hold on, you said afford it. I just want to correct you. This is what I would say.
Go ahead.
When you're looking at home ownership,
Excuse me, Shirley. It's the deal room, baby. Let's argue. Let's disagree.
You could become a master debater.
Yeah.
That's not a problem.
Here you go. Let's go, Stan.
Nah, it's really not worth
the
it.
bank will qualify you for a loan, but doesn't mean you can afford the loan. Remember that. Remember, if you own a real estate, what you can afford and qualify are two different things. Because people every day get pre-approvals for homes just based on numbers. But the negative of it, they don't factor in your cable bill. They don't factor in your car insurance. They don't factor in your cost of living, groceries, how many kids you have, cost of living, your market. They never factor that in. And if you do have student loans, what the monthly is if you haven't started paying them back. So remember, just for what you qualify on paper doesn't mean that's what you could afford.
And also, too, depending on what type of property you're going to buy. I have a friend of mine that actually just purchased a brand new home, new construction. They purchased it. Now, this property just runs strictly on its electricity. It does not run off of oil. Now, when they purchased the property is beautiful. 3 floors, basement, everything is new. But now, once we started actually looking at the property was, okay, the tax bill hasn't been assessed yet. Right? Your taxes haven't been assessed yet. So now they're looking at it. And these are young homeowners, right? Young homeowners, I would say maybe late 20s. But that's stuff that you don't really think about.
Yep.
Right? If it's a new home, who wouldn't want to live in a new home? Perfect. But property tax bill is not assessed yet. I believe the property itself was about $850,000. Right? Let's assume that they took a conventional loan. Conventional, they put down 3%, right? Let's assume that, so the mortgage would be how much approximately? I don't know. Let's call it
8% on that. They put down like
3%,
like 24, 25K, somewhere 26K they put down.
Let's say 50%, right? Let's say 50%. So now they have a mortgage for $800,000. Now, what's the rate? I know, Darryl, you had the mortgage calculator before up.
Yeah.
So $800,000.
That the down payment would be a lot less. Yeah, most people are not putting down 10%.
Yeah. So like 3.5.
Depends on what market. Remember that.
For number 6, right? Let's say let's call it
10%.
24,000. Put 25,000. 25,000.
Percent side.
Okay.
Right. Click the percent side. That just put 3.5%.
That's what I was thinking, right?
Yeah. 3.5%.
That's
Majority of loans done in America are FHA loans.
All right.
Okay.
Interest rate, I don't think interest rates have been as low as 6 lately,
What
right?
do you mean they're in the
6.25.
They're in the fives?
Yeah,
All right, so let's leave it at
Low
6.
sixes, realistically. Low six.
Yeah.
Let's say 6.2.
Yeah.
6.25 to be realistic.
Okay.
We'll calculate.
Cool.
All right, so now that mortgage payment is $4,753. Now, in order for you to qualify for that mortgage payment, let's assume that you're together.
And don't forget, that's only principal and interest.
Correct. $4,753. You still have to factor in taxes and insurance, but let's just say that's the number. Let's go ahead and see that's the number. Wow. Yeah, you would have, and these are just rough numbers, and I'm just going ahead and you have to qualify, about $15,000 a month. 15,000. So that's 15,000 times 12 months. If it's you and let's say someone else, I guess that's about correct, right? $180,000, $200,000, but you also have to factor in you have expenses. But let's just say that all the numbers say 180,000. Now,
Can I just say something? Just because I'm trying to jump into the conversation because you guys are nerding me the hell out with all this mortgage stuff, all this mortgage talk. So I just tried to break it down like as if like how Jose and I would do if we're trying to calculate payments in revenue base. So I just did how many payments is a 30-year mortgage? Well, it's
360.
360, right? So the actual mortgage it says like the total monthly payment on this deal would be $5,537.50 on an $800,000 mortgage.
and that's because you're estimating taxes and insurance, kind of, right?
But that's a low estimate, realistic.
Depending on where you live.
Yeah. So now, if we went ahead and we did that payment over 360 payments on an $800,000 home, you're gonna end up paying at the end of 30 years $1,993. I'm sorry, $1,993,500 for a 30-year mortgage on an $800,000 home. That's you almost pay $2 million for $800,000.
Now do that with 50 years.
Now let's do that for.
Oh, man.
And for a fact,
Oh, it's
your
not
house will
up.
never appreciate. Your house, majority of the time, will not appreciate enough to make it make sense.
Right. And that's what it is. You're not going to have equity.
Yep.
The equity, you're never going to reach the equity as fast as you would if it was a 30-year mortgage.
Correct.
And that's what a lot of people just don't understand. Or just, let me not even say that.
Educated on.
Correct.
I think it's more of a broad problem, like you were mentioning before, Stanley, like the cost of tuition, student loan debt is going up every year for everyone. So you got to factor.
Wait, hold on. I'm sorry, gentlemen.
Yeah, guys, really quick. So on a 50-year mortgage, paying $5,500 a month for 50 years, which 12 times 50 is 600. So 600 payments of that 5,500. At the end of 50 years for an $800,000 mortgage, you guys are gonna end up paying $3.3 million.
That's insane.
$3.3 million.
And also keep in mind the reason why Stanley originally said that it makes no sense as far as a mortgage payment, because he's right. Think about, so the idea is you get a 30-year mortgage, you make a payment. By the time you're looking to retire, maybe you want to, let's say, refinance, right? Because you want to do what is called a rate and term. You don't even want to take cash out. So now take that small balance and extend it over 30 years. What happens is you have the ability to do that at 30-year mortgage because you've generated so much equity.
Mm-hmm.
On a 50-year mortgage, you really cannot. So
Done.
on this, it might be where you're going to hold that payment for maybe another 30, 40 years. You're going to hold that same payment and not have the option to refinance, not have the option to not even cash out. Forget about taking cash out.
Yeah.
Rate and term, right? Which is it's insane.
Which you're destined to do a refinance around 50 because you're going to want to stretch it out again to keep it affordable.
Exactly.
Your income's going to come down.
I just want to let you guys know this as well, just because again I'm nerding out over here with the numbers. So I did the same deal, but if we did it at a 15-year mortgage, so obviously the payment's going to go up, right? Because we're shortening the term. I think everybody out there understands that, right? Mm-hmm. So the mortgage payment would jump up $1,900, so it's jumping up to $7,400 a month. But instead of the 360 payments, it's 180 payments because it's half the term. You end up paying back $1.3 million. So on something where you would pay $500,000 in interest, instead, if you went ahead and I'm sorry, yeah, $500,000 in interest that you guys are going to pay on top of that at the end of a 30-year mortgage, what do we say the payment was? It ended up being 1.9. Yeah, so I mean, look, you saving $600,000.
It would be a little less too because your interest rate drops when you're
Yeah.
short of the term. So the rate
Yep.
probably be like mid fives, 5.75. So
Yeah,
matter
no,
what.
that's crazy.
This is why we chose, and I like that we actually started deal one, right? Our first episode for the deal room to actually be understanding what it means, cost of capital.
Yeah.
Right, because it happens a lot to everyone, whether it's on the mortgage side, whether it's on the business lending side. We see this on a day-to-day, right? Whereas you want to go ahead and get your clients the best deal possible, and you feel at times that the best deal possible for your client is to go ahead and get a line of credit, go ahead and get a term loan, right? Now, it's great for the clients that qualify, but there's a large number of clients that everyone submits or everyone speaks to, or unfortunately, business owners, what they do is they use their personal credit to go ahead and sustain their business. As a result, their credit score drops, but they want the better programs, right? Who wouldn't? You walk into a dealership, who's going to go for the Honda Civic or the Ferrari, right? Automatically, you want the best things. You want whatever's held higher, and that goes to to just inform the affiliates. Whenever you speak to a client, don't automatically be the yes person.
Never.
Don't automatically be the person that is going to tell them, yes, I'm going to do this. Yes, I'm going to do this. Yes, I'm going to do this. Because think about that. Let's assume there was someone in your corner and all they were a yes person and never told you the truth, right? You would never be able to grow. You would never be able to get a straight answer. Don't be that person, right? Then this is why understand what the needs are, or at least on the business lending side, understand what the needs are. And a lot of people knock it, but understand what the benefit of even something revenue based is, something short term. A merchant cash advance, everyone says, oh, it's bad, it's bad, it's bad. No, it's bad if you don't know how to present it. Oh, I can't sell this deal because the client wants this. No, you just don't know what you're saying. You just don't know how to present it to a client, right? A client with a 500 credit score, what if you told them you could give them a lot of credit? They'll be ecstatic. A merchant cash advance can actually serve like that. You want to know why? You can refinance the funding after 50%. You can give him or her access to more money. Everything is about perception. How do you present it to a client, right? So don't always assume that what you think it's the best thing for the client or what you hear about all the time, right? 0% interest business credit cards or a business line of credit. Those are great. What if your client doesn't qualify for that?
Then what do you do?
What do you do?
How do you pivot?
Right, exactly.
How do you pivot from that?
And you can't, because you're like, yes, I can get you this. Yes, this is the best program. Yes, this, yes, that. No, it's okay.
No.
Let me understand what you want. I get it, right? I get it. Oh, I keep applying. Everyone comes to me with a cash advance. Okay, let me tell you something. If you are doing the same thing over and over again, your sales haven't increased, your credit score hasn't changed or increased, or let's say it changed and it dropped, and you're expecting a different result, that's the definition of insanity.
Yeah.
Right? You're doing the same thing over and over and over again, expecting something to change. How? Right? Even if the situation got worse. So when you speak to clients, understand, and that's the purpose of the deal room, and that's why I said I love the fact that we're starting off on this segment, because it's a very simple rule. Understand the difference between cost of capital, understand the difference between an APR, and understand the difference between setting expectations or being a yes person rather than being a servicer, someone that's going to service the client correct. Ryan, you're new here now. You want to read this comment real quick?
I would be honored to. Hell yeah.
Hell yeah.
All right, let's see. Thank you for having me, Jose, and the team. Thank you for having me. First time in the deal room. So it's hard making a dollar out of 15 cents, but that's what the government expects us to do.
Yeah, but you want to say that?
You want to expound on that?
I would love to, but to be transparent, I can't really see that.
All right, so what he said was exactly what you said. It's hard making a dollar out of 15 cents, but that's what the government expects us to do. I guess.
Jonathan,
what do you do, Jonathan?
Jonathan, do you want to unmute your mic?
Yes.
Try to talk to us real quick, bro to bro. You know what I mean? I know
you're it, Jonathan.
I know you're a Bayshore alumni, so we're not camera shy, right? There we go. Oh, that's all good. Maybe it's camera shot. Anyway, listen. So I think what Jonathan is trying to say is that maybe the government maybe the government thinks that everybody's okay financially. Meanwhile, we're really not. I think that's what it really is. But John, what I always tell people is if you guys are working a 9 to 5 and you're not really making the money that you want to, either try to go into business for yourself, where the opportunity is endless and your lifestyle, whatever, your opportunity is endless, or jump into sales in which your sweat equity matters, in which you get in what you put out. You know what I mean? I don't think that the day and age for people that just be able to go ahead and succeed with is really there to really build a whole lot of success if you're working a 9 to 5. Whenever you have somebody that's cutting you a check, you're gonna be capped. You know what I'm saying? That's just my opinion. Again, we're getting heavily into opinionated stuff on this podcast now because we want to open up the floor for debate. For anybody said, my personal belief and why I jumped into sales is because I was in customer service when I was in college, and when I realized that the girl next to me that was doing shit at her job was getting paid the same hourly wage that I was, and I was busting my ass, is when I finally was like, yo, you know what? I need to jump into sales. You know what I'm saying? Because I know I could talk. I could speak to anybody, and once I learn the product, I can pretty much sell anything. So from that day on, listen, I think I ended up quitting that job like a month later. It was absolutely insane once I came to that realization. When you're young, you come to those realizations.
Was that your chicken spot?
No, it's Red Mango.
Oh, okay.
Man, if you guys like frozen yogurt.
But also too, Jonathan, understand, just go ahead and look at what it is that you're looking to do, right? Understand that one of the biggest things after the pandemic was something called financial freedom, right? One thing that allowed us to do is, remember, we said earlier, Albert said earlier, your phone, right? It's $1,000 phone. But the $1,000 phone allows you to reach a number amount of people.
Yep.
Not saying, whoever works a 9 to 5 or earns, I don't know.
Hey, Chris.
Hey, Chris.
Hey, Chris. Christian.
Did you figure it out?
Now you figure it out.
There we go, Chris. But that's what it is, right? Is understanding what financial freedom is, and sales allows you to do that, right? We can go ahead and work remote. The reason why there are call centers now that excel, or call centers everywhere, is because all you need is a computer, an internet provider, and just before was a modem, but now it's just Wi-Fi. You just need a computer.
Yeah, but listen, most importantly, motherfuckers need ideas.
Yeah.
You need an idea. You know what I mean? And obviously we see that the creative market is very saturated. I think if you draw a circle on the page, there's probably been billions of people who drew a circle before. How is your shit's gonna be different? And I think that's that's something that also we learned during the pandemic, right? So during the pandemic, what we all realized is that some of our bills were being taken care of by the government. They were waiving rent, they were waiving payments. So people weren't really, and they weren't working. So people were able to be creative, focus on what they like to do. Because that's for the first time in some people's lives, they were actually working without, they weren't working paycheck to paycheck. Their bills were covered. They were just chilling, collecting, money from the government. So they were able just to be free. And that's when I think the most amount of LLCs were opened up.
Yeah.
People started transitioning online. And then companies realized that they didn't have to even have a brick and mortar location because everyone was working remote.
And we had to adapt.
Yes.
Right? Everyone had to adapt. Yo, you're at home. What are you going to do? Right? How are you going to make money? And that's why Daryl says, and he's correct, that the LLCs opened, a lot of core companies, just in general. Yes. Everyone became an entrepreneur. Yes. Right? Everyone became an entrepreneur. TikTok, social media, being able to just sell products online. Right now, one of the biggest things is dropshipping, e-commerce. Yeah. I have a friend of mine that did e-commerce, and he did e-commerce selling, I think it was baby stuff, right? It was baby, whether it's cribs, whether it's toys, etc. He did pretty well for himself. Now it's TikTok, right? Think about it. QVC was one of the biggest things back in the day. Now TikTok is a QVC. Why? You go on TikTok and you have someone right there saying, hey, buy my product because it does this, it does that, etc., so on and so forth. And then what do? Now you go to the TikTok shop. Now the algorithm picks everything up and says, oh, you watch this video, I'm gonna now bombard you, feed you with these ads. Listen, I tell the guys in the office, TikTok made me do it, right? We just bought I think, what is it called? A diffuser, a wireless diffuser because it said, you know what? Elegant hotels use this or smell like, and I go, elegant hotels. Like, wow, you know what? That'd be great. We don't have to smell chicken or we don't have to smell food. Why not? And it was great. It's very, very great scent, but it's just learning how to adapt, right? Adapt to the times. One of the biggest, if you want, read a book. One book I'm going to suggest to you is called Who Moved My Cheese? Very short. It's a couple of pages. Who Moved My Cheese? Is about 3 mice. Read it. And I want you guys to then let me know exactly what it is. But it's all about adjusting with the time. Because if you do not adapt or adjust, you will be left without your cheese. That's exactly what it's about.
You know what? And I kind of feel like the pressure of my cheese being moved. You want to know? You want to know why? Because I'm still not a believer in AI. Right now,
what do you mean you're not a believer?
Well, let me get there.
Okay.
So now,
break it down.
Not saying I don't believe in AI, but I just haven't incorporated AI much into, I guess, my personal life. For work here in the office, AI is killing it.
I was just gonna say that. I was like, well, I guess we must be doing a great job not telling you guys about it.
Listen, AI on the business front is killing it. But I still ask Siri stuff into which people like Jose open up their phone and they're asking ChatGPT, and I'm still not up on that yet. You know what I mean? But you got to get with the times, because and now even in my emails are being summarized by AI. I don't even have to read my emails now.
Gemini.
Right up top, the Gemini is just summarizing it.
Google something, it pops up immediately.
Right. That's it. Jose showed me the other day that Gemini's even reading the bank statements in our email.
Yeah, and rewriting your emails. It's who was it? Chris. And Chris, I know you're not gonna get upset if I say this and I use a scenario. Chris was like, you know what, Jose, I'm very upset, and I'm typing this and I'm reading it, and I'm like, Chris, I get it. Someone got you upset, but we're in the service of customer service still. Do me a favor, hit this button here and just put polish. And then it rewrote everything. So I'm like, Chris, you still can vent, right? Because we need to be able to vent. You still can get your words out. But now, just with the help of technology and AI, hit a little button and just put polish, right? What it's kind of like what would a CEO say? Right. And what would kind of, remember those wristbands? What would Jesus do? Right. What would a CEO say? And you click that button and now all of a sudden, boom, it polishes it up.
You can type anything. Like literally, I just wrote on ChatGPT, you're a non-QM mortgage expert. Find me a list of all investors in New York, New Jersey. It gave me a list of contractors.
You've done that several times because he did that with accountants. I remember that. He's like, Jose, you know what? I don't want to be on the dial. I don't want to call these leads. I want people to feed me deals, and I want to just tell them, I want to speak to the masses and have them send me over deals. He literally, I think you were one of the first that I saw do that. He put it down. I was like, really? ChatGPT can actually speak or look up, Google databases and reviews and everything else, and it gave him. And I fact checked it. I was like, wait, hold on, let me look at this. And it was. And it was the area that he wanted to focus on. And Joe, you wanted to focus on, whether it was, a certain niche, right? A certain type of demographic, right? Because majority of the times is you want to small to medium-sized businesses.
Yes.
Right. That's what you want to focus on. I think that's what he put down, and that's what you did, right? Just tell us a little bit about that experience.
Well, it's crazy how accurate it is, because you could make like a list. Like I just made a list.
Scary.
It's a little bit of both.
Also, you can
or amazing. Hold on, or amazing. You got to throw amazing on there, because now that saved you going through the yellow pages.
Hell yeah.
It saved me a lot of time.
And you can pull from the yellow pages. Hell yeah. And Zoom info. Give me contact info. And also cite your sources with ChatGPT, so it sends you all the sources so you can confirm everything's legitimate.
You can say, go through LinkedIn, give me a list of all the investors, all the mortgage professionals. It'll do it for you. They'll put a spreadsheet together, names, emails, phone numbers.
She was on the phone. She was on the dialer. She felt like one day that her pitch just wasn't working, and then she ended up rephrasing her pitch with ChatGPT, and she actually crushed it that day. One of the other things that she did with ChatGPT that I now advise all newbies into the revenue-based industry. She was pitching the freaking ChatGPT robot like the ChatGPT robot was a client.
And just keep in mind, you have to teach it first, right? What it is, what I do, what my position, what my role is in the company, what kind of company I'm in, and then after that, once it learns everything that you want to teach it, then you can now start asking it questions. So it's kind of like training your own assistant, but the learning curve it's multiplied by 100.
Yeah,
because they can learn very, very quickly. You could take 30 minutes, teach it something, and then ask it a question. And like Daryl said, it was hit me with rebuttals, but also hit me with what can I say back?
How can I rephrase it?
How can I rephrase it? Right. So hit me with questions, but also provide me rebuttals.
Can I ask you guys a question really quick?
That over and over again.
Yeah.
Yeah, it was so many different scenarios. Let me ask you guys a question because we're saying that AI is all good. AI is all good. Like we're obviously we're jacking it. Like we love AI, right?
Yeah.
Definitely.
What are
Makes
some of
it a lot easier.
What are some of the drawbacks that you feel like if we're gonna argue all the way, you guys have to fucking think about the other side of the coin.
A lot of companies, tech companies, marketing companies, they're not hiring anymore. Why do they need to hire anybody?
Yes, I was gonna say that as well.
For what? People are staying in the workplace longer. First of all, people are not retiring. So there's a lot of even lawyers are using ChatGPT to summarize stuff. They're not even hiring assistants.
Literally to summarize legal docs.
You have to understand that times are changing, right? Now, what we were saying before was understand that technology it doesn't have to be a threat. It can be an asset.
Right.
Understand that right now, if you look at it, there's a lot more millionaires that are in the age of 21 or not even younger than that.
Yeah, bro.
But in their 20s.
Yep.
Early 20s. Right. And why? Because they were able to get on a platform and understand an algorithm and understand what people wanted to watch. Right. So you wanted to watch someone prank someone. Right. And that was that young kid. There was a young kid that did this and did that. Now it shifts because you have something called Sora. Right. Sora 2, I think now came out with a new thing where I started looking at it and I was like,
real quick, explain what Sora is.
So Sora is an AI. And I started watching videos, and it's funny because I was like, oh my God. I said to my niece, I was like, hey, listen, did you see this? I want to train because I have a puppy. I'm like, I want to train my puppy how to do this and this. She's like, that's AI. I said, what are you talking about?
Can't even tell.
I was like, what do you mean? She's like, well, look at the bottom. Look at this. Look at that. And I was like, oh.
How old is your niece?
She is 15.
And she was able to spot that.
100%. So now it progresses into now you don't even have to get in front of a camera.
Yep.
Right? You have to just understand how things work. People just want to watch certain things.
We might not even be real right now.
Right. This may be an AI. Now that also trickles into something else where there was there was actually a guy in China selling stuff on I don't know if it was TikTok.
Yes. Where
everything he did was AI. Right. So everything from, what they did, though, there was a little bit more work that got into it, how movements and how he did this so that no one would be able to tell. But he taught the AI how to respond back to it was a live feed.
Yep.
How to respond back to questions. So now the reason why we keep emphasizing, right, we're moving with technology is because just like someone was able to present a product. And still, if someone had a question, you were able to give an answer to. Affiliates out there, even if you're not an affiliate, figure out. You now are in a time frame, right? In 2026 for you should be, what is it that I wanted to become and do, or what was my biggest dream that now I can actually do? Because now you have the ability you wanted to, I don't know, travel around the world. You can do that. And you can do that without actually having to work, but you'll still get paid. You want to, I don't know, whatever your hobbies are. It's not even a job anymore. It's whatever your hobbies are. I want to just paint. All right. Well, let's assume no one buys your paintings. Figure out how to generate revenue. Social media, platforms pay you. Right? We tried it out one time where we went ahead and did we did TikTok live. We made 16 cents. Right? The first time we tried it, I was like, wait, hold on. I don't care how much money we made. As long as we made something, that means all we have to do now is scale, right? That's it. But you have to figure that out. And I guess, that's just my final word so we can wrap this all up because I'm sure you guys want to watch the game. I don't know if there's games today, etc.
There's always games.
Well,
Stanley, let's get your final thoughts, Stanley.
Yeah, Stan, go ahead.
When it comes to final thoughts, starting with our new first season of Deal Room, right?
Episode 1, baby.
Episode 1 from the beginning. It's the rebirth. It's the evolution. You know what I mean? It's transcending. And the reason I use those words is because a lot of you have been here with us since day one. We're trying this thing of ours. We're trying to find our space, trying to find our way, and evolving. You saw us have bumps, bruises, you know what I mean? Trip up, make mistakes, disconnects. We have a conversation, all of a sudden the bandwidth blows up because too many people logged in. And all of a sudden we freeze, we keep talking, everyone's like, hold on guys, you guys aren't moving for the past 10 minutes. Or it's like sound effects and round of applause and only us hear it and you guys can't hear it. So our first season has been a lot of bloopers, right?
It's been a learning experience.
Definitely.
Yes.
You know what I mean? You don't make mistakes, they're lessons. But this is evolution, where we're going to give you more solid content, more tools, more an in-depth look at how you scale your business, how you create a business, and how you look into different industries. Now, as we get this data and we feed it to you, now we know how you consume it. So we're going to sit and take our time, and we're going to give you the products you need, the knowledge you need to be successful. I know some of you are going to implement what we teach you, and some of you are just here to learn. We just try to be a great steward for our community, and we hope every night when you log in, you exit with more knowledge and more confidence in whatever you do in your field. And hopefully one day you'll be sitting next to one of us, closing a deal either on a phone, on a Zoom, through email, and we're sending over a check.
Nice.
That's the game plan. Off to my boy Ryan. Final thoughts.
There you go, Ryan.
Pleasure. Thank you, Stan the Man, or Sexy Chocolate, as they say.
Is that what you call him?
Of course, every single day.
Wow.
So we're gonna. I know we don't have enough time, but we're gonna have to touch on this next pod. Is the fact that it's also AI replacing white collar workers as well? Because, for example, all the banks, everyone's doing it. They're integrating ChatGPT with their underwriting as well. So it's not just blue collar work or anything like that. It really is something that all of us need to get versed on, especially if we don't want to be in the 9 to 5 business. Because, like they just piggybacking earlier, I know I wasn't here the whole time, but that's why I got into sales as well. Is why do I want to work so hard and be next to someone who's just scrolling Instagram, doing nothing all day and making the same thing? It doesn't make any sense at all. But my final thoughts is thank you for having me. And we have much to discuss on the next podcast because this brought up a lot of great points, especially with 2025. And it's going to be a great year, 2026. So let's get it, everyone, to the deal room.
Wait. You got to say tagline.
Your tagline.
Tagline, hell yeah!
Joey G.
Yo.
Hey, everybody. Welcome to the Deal Room.
We got the best cameraman in the game. Shout out to Radical.
It's a great first episode. Very informative. And, I hope more people join the community. I'm speaking to people that join Brokers Connection every day. A lot of deals are coming in, appraisals being paid for. On the mortgage side, it's really picking up. I just hope you guys are here to grow with us and learn more, become experts in the field. You're an extension of us, is what I always love to say. So, the more people tuning in, the more deals we get rolling. And we're building sources of income for people that are tuning in every week. So, this is a great opportunity to learn and also to earn. So, hope I see you guys next week and every other week. Joe at fundrockcapital.com. Don't forget.
Let's make money together.
Yeah.
All
right. Well, ladies and gentlemen,
that's it.
These guys are on the Fun Rock gang signs and
No.
stuff. I know you Fun Rock guys have us outnumbered right now. Okay, you guys have us outnumbered right now. But ladies and gentlemen, as you guys can see, the format is a little bit different now, right? For a year, we taught you guys the ins and outs of deals. We taught you guys the ins and outs of how to sell. We taught you the ins and outs of how to prospect leads. this year and from now on going forward, we're going to keep you guys up to date with what's happening now, how to pivot now, what skills that you need now. And we're going to teach you guys just in general, just how to win now. You know, I'm not saying that anything that we did last year was bad or wrong, but it was laying the foundation. You know, we had a lot of new people to the industry. Now we have some people that's been paying the monthly Brokers Connection fee for 12 months, right? We got to keep the content fresh. And we want to give you guys an insight into what we all, not just, and not saying that anything is scripted, but like we did everything by the book last year. We taught you guys just the by the book way that things are done. Now we're gonna, not saying we're gonna show you guys anything otherwise, but we're gonna show you guys how to kind of navigate and think quickly on your feet and how to stay ahead of the times. Again, right now, what's going on in today's climate with, 50-year mortgages is being proposed, and it's being proposed as a thing that's going to benefit everybody because you're going to have such a small payment. And that's what Jose and Stanley just showed you guys. Saving $60 a month, which is just filling up your tank. Saving that is going to make you guys pay almost 2.5%, almost 2 times more interest on your home. Doesn't really make much sense, right? Just to save $60 a month. Suck it up and pay the $60 a month. You know what I mean? But again, a lot of people think that it's going to be a good thing. They have no idea. You're in a circle at your 9 to 5. They think it's a good idea. You know what I mean? It's not a good idea. You know, I have friends that are still paying back student loans that are not even in the field that they went to school for. You know what I mean? We're going to get real with you guys this year. We're going to get really intimate. We're going to speak to you guys like Jose always says, like you're our college roommates. Okay? If you guys want the real deal, if you guys want real knowledge, you guys want real life scenarios, come to the deal room. We're almost like death row. Come to death row. It's like Suge Knight right now. Come to death row. No, seriously, we're going to give you guys the real. We're going to go in depth with real life scenarios, real deals that we had going on this week. We're going to speak to you guys. Probably going to curse a little bit more. Thank you for Jose for letting us curse a little bit more. But we're going to be real with you guys because at the end of the day, we're on the front lines. We're speaking. You guys might be in a profession where you guys don't have to interact with the general public on a daily basis. I mean, please, we do. Okay? And the general public they have beliefs about stuff that we don't because we're behind the desk every day. You know what I mean? But we appreciate all you guys that have been here with us for 12 months, that have been here with us throughout the rebrand. Okay? And we want to make sure that the content is juicy for you guys. We want to make sure that we have, shout out to my guy Albert, leads the closing, for being a guest on the pod tonight, just even giving us pushback. We don't want to agree with each other anymore. It's not, we don't want to be a united front. We want to be 5 individual podcasts going on at one time. And maybe you guys might identify with what we're saying. You know, maybe we might spark a new idea with you guys. Maybe you guys agree on some of our radical thoughts. Whatever it is, we're going to be 100% authentic. We're going to give you guys the real message. And again, we're going to give you guys just different perspectives. Hopefully next podcast, you guys want to jump in to the battlefield with us and give us your understanding, give us your position of how you feel about what's going on in today's climate. You guys might, it's my final thought, maybe you guys might share a difference of opinion, but maybe that might spark somebody else that's watching the pod to chime in next week. We want more engagement this year from all of you guys. We're going to be really engaged.
Yeah.
You know what I mean?
Hold on. The reason why is because we want to just make sure that we stand out from everyone else. Right? Yeah. Everyone does a podcast. Everyone follows our banks. Everyone does this. Everyone does that. How do we stand out? We want to get more involvement from you. Ask us questions. Put us on the spot.
Yes.
Like Daryl said before, is yes, we're going to get real. Why you want to get real? Because at the end of the day, how do you overcome these objections on the phone? Right? We don't just want you to send us deals and we work them. No, we send us deals. Let's approve them and you work them. How else are you going to learn to become successful, become that person that's going to go ahead and excel? Let us teach you how to fish so you can go ahead and just get all the fish later on. We don't want to do it. Right? So just to end this podcast, I loved it. Great.
Do we have outro music? Radical! We have outro music?
He just shook his head no.
Okay, now.
All right.
All right.
I don't have a final thought. I have a final say. Yo, when we let people know, it's the deal room, but to the family and community, this is the war room. So we expect you guys to interact with us.
Yeah.
Give us pushback. Give us other deals that you have in mind, objections you're having. Because when we're off this podcast tomorrow morning, we all go to war. So we want to make sure you're prepared. So like I said, even though it's the deal room, to our family, we're the war room. So please bring your challenges, bring your deals, and let's have that conversation.
Listen, brokers from other shops, bring the deals in. Let us teach you guys how to actually work at the other shops that you can make you money. That's how confident we are.
Ladies and gentlemen, continue to send deals.
Yes.
We'll continue to fund your deals. Take care. Brush your hair. We'll see you next week. Out.
Bye.